Hello and welcome to the second edition of Horizon, the video magazine of JM Financial. Today we've got a guest who's a stalwart in the investment management industry, Mr. Nilesh Shah, MD of Kotak Mahindra Mutual Fund. He actually doesn't need an introduction. The entire investment management industry knows him. He's had a very long stint in this area. He's seen the investment industry grow. He's seen the investors. He's seen the India story unfolding in front of his eyes, and comes with a very vast knowledge, vast experience. And today we are going to have a discussion with him on what's happening in the United States banking crisis of 2023, what it means for India and what it means for the Indian investor. So welcome Nilesh bhai for this discussion, and thank you so much for your time. We are meeting at a time when there is a sort of a banking crisis brewing in US and part of Europe. We see 3 major bank failures in 2023 in United States. What are your immediate reactions to that crisis, and how do you compare that with the global financial crisis of 2008-9?
So Amit bhai, first thing which is so satisfactory, where Shamrao Vittal Bank in India has to announce that SVB is an American bank, not me.
Right.
Apadu to dil ત્યાં જ ખુશ થઈ ગયું.
Absolutely.
But on a serious note, the banking crisis of 2022 and 23 is actually for investment in government securities, not in subprime like in 2008. So people did learn from their mistakes of 2008 not to lend to people who were not capable of paying, but then they forgot the basic fundamental of duration. They ended up buying long duration government securities, mortgage-backed securities, and realized that when interest rates go against you, you end up losing a lot of money. So risk management is common between the crisis of 2008 and 22, but credit is not the common thing.
So essentially, if we just look at the 3 basic risks in debt side, which is duration, credit and liquidity, somewhere somebody focuses too much on one and forgets the other. Is that what we can learn from this?
Absolutely. Within US, there are banks where they have managed interest rate risk very well. And then there are banks which have failed to do it. I guess in banks where risk management process is part of the DNA, by and large they have survived the crisis. Banks which were riding a wave, like for example Silicon Valley Bank probably got a lot of money as startups got a lot of money, and they had to park their money somewhere. And in the process, they ended up probably ignoring the risks and going for carry, going for return. They just thought that government securities, who can lose money? Well, if interest rate goes up, you do end up losing money even in government securities.
Yeah. I was looking at some data from FDIC, and between 2000 and 2023, in last 23 years, there have been only 5 years where there was not a single bank failure in the US. To put it the other way, 18 out of 23 years, some or the other bank has failed. Majority of them were small, but 2008, 9 and 2023 were huge,
big names,
large names. Now, is it talking about the strength of that market or the economy that it allows weaker players to die? Or would you call it the failure of the Federal Reserve that the banking crisis keeps happening every now and then?
So I think it will be unfair to blame the regulator for crisis, because it's like road. If you build a road, if you allow cars to move, there will be some accidents. You don't stop moving because car accidents happen. I think regulators by and large has done a good job in US as well as in India. These accidents are part and parcel of this system, and people learn from those mistakes and improve. In US, I think the difference is good bank and bad banks. the good banks are banks which are conservative in nature, which manage risk well. And the bad banks are the banks which try to ride a wave, try to ride a momentum and make money. Overall, we have seen that banks, irrespective of size, which follow conservative practices, have done well. Whether it's US, whether it's rest of the world, banking is not a flashy business. Banking is all about conservatism. And many years back when I was starting my career, someone told me that banking is the biggest risky business. You lend 100 rupee and you are expected to earn 2 or 3 rupees in terms of spread. So if you are right, you will get 2 or 3 rupees. Then if you are wrong, you will lose 100 rupee. So there can't be a bigger risky business than bank, and hence one has to be extremely conservative.
That's very well said, because putting risk in that perspective completely changes the way one looks at the business. Otherwise, you are right. I mean, a lot of people want to ride the wave and they are focusing more on growth. So again, somebody had said that it's easy to lend money, it's difficult to get it back.
Absolutely.
And that's where one needs to focus.
A return of principal is more important than return on principal.
Beautifully said. But talking about learning from the past, 2008-9's global financial crisis taught us one phrase. Well, some of the players are too big to fail.
Yep.
In 2008 and 9, again, as per FDIC data, some 165 banks failed. The total asset size of those 165 banks was $544 billion. In 2023, 3 banks have failed and the total asset size is $548 billion, $4 billion more than 165 banks then. So the bigger players are failing. So did we learn or something else happened?
I think there was learning from 2008 crisis. Dodd-Frank Act came. Paul Walker's some of the suggestions got implemented. Capital adequacy went up. But many a times what happens that you try to secure one part of the area, the other becomes weak. At the end of the day, financial markets will always have accidents. If you take risk, then only you can generate return. And the moment you don't manage risk, you will fail. It's like car. If you don't accelerate, you can't move forward. But if you accelerate too much, you will bang someone. The equilibrium on speed is critical for safe drive. Equilibrium on growth and what kind of growth you are generating is necessary for safe banking. My feeling is that in American system, they have a fantastic way of cleaning up. So if you remember, Bernie Madoff scam happened. Scams happened all over the world. But in US, every single naya paisa was recovered. They went after Bernie Madoff's family to an extent that even their innerwears were sold to recover money. They went after all the investors who redeemed money out of Bernie Madoff. They didn't even spare widows and, weaker set of people who had received money, saying that no, this does not belong to you. Eventually, every single naya paisa was recovered and paid back to the legitimate investors. I think this is something which is admirable about US. They make mistakes, they allow to make mistakes, but then there is a severe punishment for wrongdoing. They clean up the mess very, very nicely. And I'm sure like 2008 financial crisis, they strengthen their systems. 2023 crisis also will lead to better strengthening of American system.
Wow, that's an interesting perspective. Yeah, cleaning it up entirely when something is caught. I think that's a big one. Yeah. I was reading another report. There's this research center called Pew Research Center, and they, in one of the articles, they wrote that the banking crisis, it happens in waves. So like 2008-9 was one, 2022-23 is another one. Prior to that, there was one in the early 1990s. So these kind of failures keep happening in waves. What could be the reason why the failures of individual banks get combined? Does it talk about the failure of diversification, that the system-wide there is a problem?
So Amit bhai, business is cyclical.
Yeah.
Now, how will subprime crisis get built? When you start lending to non-eligible borrowers, and it has to reach a level before which things can blow. So undoubtedly, crisis will be cyclical in nature. How does crisis begin? When there are excesses. If there are small excesses, you wouldn't even notice. It's like you put little salt extra in your food, you won't even notice. But when I pour entire salt bottle into food, you will notice it. So banking crisis, financial crisis will be cyclical in nature. And by and large, mistakes will be committed not by just 1 or 2%. Then they won't become crisis. It will be committed by a set of people, committed by a people who are copying each other. And which is why, crises are like cockroaches. There's never one. There's someone coming.
Yeah, there's never one cockroach. Yes, that's true. So if that's the situation in the US, how do you look at India? How is it different or similar? Are we vulnerable? Are we stronger and safer? How do you look at Indian banking system?
So compared to US, undoubtedly, India has done exceptionally well. Our regulators have been far more prudent compared to, let's say, American regulators in terms of flexibility given to the banks. For example, in US, the asset liability regulations were fairly relaxed, whereby you end up putting overnight money into long duration paper. In India, ALM regulations are far more stricter. The second thing is, assurance on the deposit side. Implicitly and explicitly, there is guarantee of the government to the entire banking system. And even when crisis erupted in Yes Bank, there was never a depositors run on the bank because there is comfort, confidence, hope that government is behind it. DICGC also covers very large part of deposits. So there is never a run on a Indian bank because of this explicit or implicit guarantee of the government. The third thing is HTM regulations. Our regulations are reasonably stricter, reasonably tighter. So put together, we can say that ke pani pella par bandhi hai. So before the flood comes, you build the floodgates. So our regulators have been proactive. They have built floodgates. But ultimately, will it always prevent crisis? Answer is no. There will be always something new which we can learn. Important thing in finance is to learn from your mistakes and don't repeat it.
Incidentally, I also remember in 2009 also when the real estate sector was booming. 2007, RBI had increased the risk weightages of real estate assets from I think 1 to 1.5, and that reduced the lending of banking sector to real estate. I think that was also pani pela par bandhi. So
as we speak, they have advised that please don't increase unsecured lending beyond a point. They have advised one bank CEO that please bother about growth because you are running at too fast a pace. So RBI has been very, very proactive in addressing the constituency, giving them nudges so that they remain on course and don't get waylaid.
It's a brilliant one. And so given that now, if there is an Indian investor, how should the Indian investor look at the current situation as an investor in India and as an investor in the international markets?
So as an investor, should you invest in India as well as abroad? Answer is yes. We need some geographic diversification. Number two, in India, the experience teaches us that people who have made money are long-term investors. 89% of traders lose money. My feeling is that 99% of investors make money. So you have to figure out which sports you want to play. Trading, where 89% probability of you losing money, and Investments were 99% probability of making money. Number two, disciplined investor makes money. Uh, Amit bhai, I'm sure all of us in our starting of career have followed tips, followed rumors and bought stocks and burnt everything. Then we became disciplined. Please learn from our mistakes and our experience and be disciplined from the beginning. And the third thing which I have seen is that it's always quality which pays. Uh, Bulk of the return comes from 75 or 100 companies. These are the companies where managements are good, quality is fantastic. So for India, be a long-term investor, be a disciplined investor, and be a quality chaser. Buy quality companies. That should be good enough. India is a rising tide. It will lift every boat. Just don't sit in the boat where there is a hole. Then it will not get lifted.
Or don't create a hole unnecessarily.
Absolutely.
Yeah. It's very similar to somebody recently said about India's story that, one of the biggest risks that we face is that we will score a self-goal.
Absolutely.
So long as we don't do that, we are fine. So,
yeah.
Thank you so much, sir. It was a pleasure talking to you, and as always, very insightful discussion on a topic which apparently looks a very tough and complex topic. It's US, it's banking, it's crisis. But the way you broke it down and simplified it, it was wonderful talking to you, sir.
Thank you. Thank you, Amit. Bye.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.